Hi, my name is Scott Dahl. I'd like to thank you for once again joining me for my podcast. This is number 7 of a series. And what I would ask you to do is go back to number 1 and work your way through, because what I'm doing is I'm giving you a basic education of technical analysis, how I make investment decisions, and then coming to some conclusions of what I believe is going on in the market and what I think is going to happen in the future. So what I think is happening in the market right now is I believe we're in a secular bear market. Now, it sounds horrible. Secular bear market. Secular would be a long term. I believe we're in a long-term bear market. However, inside this long-term bear market, we're going to have these shorter bull and bear moves. They're called cyclical bull and bear moves inside this larger trend, this larger downtrend. What I want to do today is I want to explain the concept of breadth. Breadth is important. It's spelled BREADTH. And what breadth is that's the internal health of the market. So, for example, if the stock market's going higher, then you want a lot of stocks that are participating in that up move. If there are a lot of stocks that are going higher, then that means that there's strong breadth, and that means that the move should continue or could potentially continue because of this strong participation of all these stocks. However, if the stock market is going higher, if you see a particular index that you follow, the Dow Jones, the S&P 500, if you see that going higher, but the breadth is waning, there's not that many stocks that are going higher, the index can still look like it's going higher, but if it's only carried by a few stocks, if those stocks start to roll over or not continue to go higher, well, that's going to more than likely lead to a market sell-off. So and we're in an interesting situation right now where breadth is an important concept, because we've had basically 6 or 7 stocks that have been driving this market for a period of time, and it could go higher. The strongest thing that the market can do is go higher, the price to go higher, and we've been making new all-time highs, and that's extremely positive. However, nothing goes up forever, and there could potentially come a day of reckoning where we're going to see a sell-off. And if you look at the previous, the bear market in 66 to 82, the sell-offs were very, very massive, and the rallies were very, very good as well. So that's probably the environment we're in. Let's get back to the breadth. So what breadth is it's the stocks going up when the market goes up. I always like to use this analogy of a general going into battle. So if the general is going into battle, if he has a lot of his troops behind him, he stands a much better chance of winning the battle. But as he's going into battle, if he only has a few troops behind him to fight, well, more than likely he's going to lose the battle. That's the same thing with the stock market. So if you have a market that's going higher, and you have a lot of stocks going higher and participating going up, that means the internal breadth is very strong. We haven't had that. We've been basically, again, this market has been driven by these 6 or 7 AI-oriented stocks, and you need this more broader participation. Not only the big companies, but the small and the mid-sized companies too. They all need to participate in order to continue this uptrend. Now, we did see back in the fourth quarter of the previous year of 2023, we saw breadth expand and it looked great, but it seems to be waning a little bit again. So long-term breadth is good, but it kind of seems like it's rolling over a little bit right now. And I'm going to demonstrate that using the charts. So there's a lot of different measures of breadth. But what I use is what's called the AD line. I use several, but the AD line is the most important, and it's been around the longest. And what that is the AD line is an acronym for the advanced decline line. So what you do at the advanced decline line is every single day you take all the advancing stock. Let's use the NYSE. What that is that's the New York Stock Exchange Index. The New York Stock Exchange it's a makeup of about 2,000 different stocks that are traded. And they're traded on this exchange. And we all know that this is one of the original exchanges. A lot of it's electronic right now. There's very little activity, even though there are still physical people on the floor in the New York Stock Exchange. Very little activity goes through the floor. Most of it's done electronically. But breadth measurement on the New York Stock Exchange has been around for about 70 years. So you can measure breadth on different indices. But since we've been using the NYSE to analyze breadth, I'm going to use that in my demonstration here. So all you do every day is you take the advancing stocks divided by the declining stocks. If you have more advancers and decliners, That's an up day. That's an up day in breadth. It may not be an up day in price, but it's an up day in breadth. That's what we're measuring. That's what I'm going to show you. If you have more decliners and advancers, well, it's going to go down. That's a down day in breadth. And this is how you get a chart or a measurement of breadth. So you can visually see, hey, is breadth improving as the stock market improves? If not, it's a warning sign. And I will tell you that from my experience and from my study, that if you have breadth that starts to roll over or breadth starts to wane as the index is going higher, that typically what happens is the breadth can correct itself, but over a period of time, it has a tendency to pull the index down as well. So we're going to look at breadth. I'm going to show you a couple charts, and then I'll kind of give you an idea of where we're at now. So what I've got up is I have a chart of the NYSE composite. And so this is a chart of the 2,000 stocks that trade on the New York Stock Exchange. It's not the S&P 500. It's not the Dow. It's the NYSE. You don't hear about it that much in the news. Everybody is focused on the S&P 500 and the Dow, but here it is, the NYSE. So something I want to point out, I've pointed this out before, you can see that each one of these lines is a day. It just happens to be a day because this is a daily chart. So these green lines, that's an up day. This is the price of the New York Stock Exchange. The red lines is a down day. So I'm going to pull it back in here and take a look at the trend. Now, we've talked about trends before. This New York Stock Exchange, the NYSE index, is in an uptrend. How do I know it's in an uptrend? Because I was able to draw two lines across the bottom, and you can clearly visually see that this is an uptrend. So this is a few years of data. Here you have 2020, the COVID sell-off. That was a lot of fun. And then you have this tremendous move out here that nobody anticipated, really. I mean, none of the economists, the fundamental analysts thought we were going to see this kind of recovery. Sell-off, a correction, and then boom, we're going higher. Now, this is, this is a bullish chart. We're in a, I believe this is a cyclical bull move, a shorter term bull move, but we're in it and it's long and strong. It's continuing to make new highs. Maybe not this chart, but we know that the Dow, the S&P 500, the NASDAQ's only 2 or 3% away from new all-time highs. Very bullish when you make new all-time highs. This is a chart of the breadth of the NYSE composite. It looks kind of like the NYSE composite. However, each one of these lines is a day. This is the daily chart. It's not the price of the index. It's the advanced decline line. So this green line here, we know that that was an up day. There were more advancers than decliners. This red line back here, a pretty big stick there. We know that was a down day in breadth. There were more declining stocks and advancing stocks. So from a visual perspective, I'll shrink this back in, same period, pretty much the same time period. But you can see that we're in a uptrend in the breadth. So if we're in an uptrend in the price and we're in an uptrend in the breadth, that's a positive. So I wanted to go back to price again. And the reason I wanted to go back to price is because if you take a look here, you can see that price is making new highs. But if we go back to the breadth chart, you can see that the breadth chart is not making new highs. You saw in the previous chart that price was making new all-time highs on the NYSE, but the breadth is not. The breadth has turned down. So that means even though there was strong participation, the participation is starting to wane, and that's a little suspect right here and now for a continued up move. So it's tough to determine at this point. We're making new all-time highs. It can't get more bullish than that. It looks like the breadth's starting to wane a little bit, so I would certainly be cautious at this point. So that's breadth. The internal structure, the internal strength of the market. It's extremely important. Price is most important because price is how you make money. But then you have to pull in these secondary indicators to help you determine how solid and how strong the market is. So if you have any questions on this, if you'd perhaps be interested in talking more about what I can do for you specifically, please give me a call. I'm more than happy to talk to you. It's 949-497-6366. Scott@dahlcapitaladvisors.com is my email. dahlcapitaladvisors.com. If you'd like to take a look at my website, be more than happy to talk to you. So thank you again. I hope you continue with these as I continue to bring them out. They're a lot of fun for me. Call me with any questions. Thank you.